Okay, we're back here at the Real Estate Roundtable with IPRG, and it's been a minute, but we wanted to give a quick update in terms of what we're seeing throughout the market and just have some back and forth and just talk with some of the brokers here about what's going on in New York City. It's the middle of February 2025. We're, a month into the new administration, and the market seems like it's really humming. So we have here today Adam LaBelle, Donald Flaherty, Luke Sproviero, and this is Derek Bestrick. And we just wanted to kick it around, guys. How's everything going so far into the new year?
Good. Busy.
Yeah.
Yeah.
Very busy.
Very busy. Yeah.
Lots of people wanting to do transactions right now, buyers and sellers.
A lot of inbound phone calls from investors. I think there's a new confidence in the market since Trump was reelected, and you're starting to see some things trade, some good conversations about 2025, which I'm excited about.
Is this new money? Is it 1031 money? Is it raised capital?
I think it's a blend. I mean, there's some 1031 buyers that we're talking to, but I think it's just still the same cast of characters that you talk to, and I just think they're more bullish going into this year than last year.
Mm-hmm. Adam, how about you? How's the activity looking on your end?
I would say more owners than ever before have wanted to meet with us to go over property values, and we're meeting with a lot of generational owners that I think we're sort of waiting for the election to happen, and now it's obviously post-election, and I think obviously a big trend of last year was a lot of talks with interest rates, potentially going down, and obviously that really hasn't happened so much. So I think the market has leveled out. I think people have a good understanding of underwriting and where values are, and I think a lot of the generational owners that we're meeting with want to meet with us because they're interested in selling. And I think it's going to be a very, very active market this year for a lot of different reasons. And I'm very optimistic about where things are at. So
yeah, nice. That's great. And Luke?
Yeah, I think from a broker standpoint, historically, we're very lucky, and we're coming into this year with more deals than we've ever had under hard contract. So obviously that feels, from a business standpoint, that feels really good starting a new year. So I think our entire office is obviously happy. I think a lot of buyers still, from 21, 22, whatever it was, I think they're not buying as much as we saw. There were syndicators and different developers, or not developers, but people that raised money that were buying a ton in 21 and 22. Even parts of 23, we saw their names in the comps a tremendous amount. And I think a lot of them are not buying. You call them, you pitch them deals. They have a story about financing and interest rates, which is all very true. But that being said, they're not buying. And we have a lot of new buyers that are buying, a lot of families, a lot of 1031 buyers, a lot of people that sold in other states buying. I think with the development, I think it's the same cast of characters, and they're the most active buyers that we're seeing, whether it's redevelopment to condo or ground-up condo. So it's interesting. But
what about development for rentals?
So there's the same cast of characters, right? There's people that are buying, like in Williamsburg, for example. One name stands out in my head. I'm not going to bring it up, but he's building a ton of rentals, and he's buying very consistently. He's paying more money than I've seen. There's another buyer that's buying rentals building rentals that is paying price per buildables that we haven't seen. So they're very aggressive, depending on where it is.
So are you saying that the price of land and for rentals or for condos and the price of redevelopment for, say, vacant real estate, are you saying that you're seeing higher price per foot and price per buildable than values that we've seen historically?
Yes.
Right now.
Price per buildable on condo development, especially, even rental, is the price per buildable is higher than we've ever seen by a large amount. $50 a foot to even $100 a foot. More than we're...
On existing buildings or for land?
No, like land, right? Mm-hmm. And sometimes there's existing structures, right? That has been really crazy. And the rental development sites, too. There's a huge uptick in the price per buildable. To answer your question, I think this is the better thing. If you said, as a broker, if you could list anything you want, what are you listing? And 100%, it's development sites, redevelopment sites, vacant buildings where someone could come in and do a condo conversion or redevelop it to an apartment building. Those are like alt 1 or alt 2 construction. That is what I'm listing every time. If I could choose.
Okay, cool. So a lot of activity in the market, a lot of deals under contract, stuff is flying off the shelves, a lot of buyers, a lot of demand. Do you think that's a function of like people think there's going to be continued inflation, like rent growth and asset values are going to continue to increase, or what do you guys think that's a function of? Do you think it's a function? Yeah, what do you think?
I personally think in like Williamsburg and Greenpoint, I think a lot of people are starting to see just the amount of, or how should I put this? People are really seeing other successful buildings getting built in terms of their rentals and what they're getting for rents. I think a lot of people are now following suit and getting even more aggressive into the area because they know what's already been done and they see such a high ceiling for these locations that I think that's what's really pushing them up in terms of their pricing. I think, look, you could say City of Yes for a lot of the rental guys. I think they could build a bigger building. They have less regulations, but I think in terms of you look at the condo numbers and what the condo sellouts are, and then more importantly, I think for the rental guys, if you're looking at what these developers are getting for rent for these buildings when they're done, it's crazy. It's astronomical from just like 2 years ago what they're getting. So I just think even the buildings that we've sold, like rentals in Greenpoint getting $12,000 a month for an apartment. I mean, that was never talked about just even a couple of years ago.
Yeah.
And now you see it more consistently. So I think once you take a look at that and you see what other people have done, I think that's bringing a lot of other developers from different areas that don't necessarily know the location so much, but they're willing to really dive headfirst and get aggressive and bid up the pricing.
There's a number of examples of this. It's
let's hear 'em.
100% correct.
Let's hear them.
I mean, you could just, it was online today, Rabsky, right? Rabsky's,
Back in China.
yeah. So like he is a Brooklyn developer historically, right? Good locations, Williamsburg, whatever is Gowanus, and he started off. He's doing a humongous building in downtown Brooklyn. That's a prime location for him. That's been under the works for a long time. But yeah, it was in today that he just bought. The news article said Chinatown. I think it's a little offensive. I mean, it technically may be close, but it was like Tribeca, right? I'm sure he isn't pitching that this is a Chinatown development, but.
Definitely not.
No, definitely
Corner
not.
of Broadway and Franklin.
What is-
Definitely not.
Yeah, but that's big for him, right?
Yeah.
And they're going into Manhattan. Then we see guys that we did a lot of business with in Bushwick and Bed-Stuy, whatever, Ridgewood. Those guys are now developing in Williamsburg, Greenpoint. They're just moving up on the markets. People are now developing in Manhattan, good locations.
Well, yeah, I think there's just been a big flight for quality, right? And obviously that was one of the super big trends of COVID. People selling condos and co-ops and upgrading into brownstones, people selling in the Bronx and buying in like core areas of Manhattan and Brooklyn.
Yeah.
I just think the market right now, there's just tremendous optimism given the clarity with the presidential situation, and obviously with the leveling of rates. I think people are extremely bullish on where things are going, and the rental market is still basically at all-time highs. There's just and obviously now with some city programs to spur some of the development, it's going to take time for all these new units to come to market, but values are very strong right now, and banks are lending, though rates are relatively high given the last few years, but I think that's what's really driving the market right now.
Just real quick on that point with the rentals. Anecdotally, I've heard from a few people that January and February this year have had better rentals than we've seen over the past 2 winters. So, typically it's a pretty seasonal market here in New York with a lot of leases rolling in the summer. Owners try not to have their leases roll in the winter, but from what I'm hearing, those units are renting just fine compared to summer rentals. So that's interesting. All right, so a lot of optimism, a lot of stuff is happening. Stock market is at all-time highs. The market is flush with cash and lots of activity. What deals are not moving? Where are we having trouble in the market?
Don, you want to start us off?
I mean, I think it's pretty obvious. I think anything rent regulated, like just dirty rent regulated deals, I think those are always tough to sell. I think your buyer pool for those are very small. I don't think a lot of people want to deal with the headache, and they want to like I'm talking big walk-up rent-regulated buildings. I don't think they want to deal with the tax bills. They don't want to deal with all the violations, all the management-intensive stuff that come with those buildings. They would rather just like clean their hands with it and just go into something that's so much easier. All morning, I just spent the morning with an investor that owns in Manhattan big walk-up buildings, and he was just like, I can't get rid of it fast enough to get into these smaller 3/1s, 2/1s, mixed-use deals. At this rate, we were in North Brooklyn, but he's like, I can't. It's like it's just so much easier on me and like my investment strategy, like how I want to move forward with my life. He's like, at one point, I wanted to buy all the big rental buildings in the Lower East Side and in Manhattan. And he's like, now it's just a nightmare to own.
At one point, they were so like sexy, the big apartment buildings, like
I mean, even for me as a broker,
the upside, like that's what you wanted, like those buildings.
That's all I ever
And
wanted
now,
as a broker, like to sell those.
Now, all people want, if you know, I mean, maybe this just restate the obvious, but all people want is just the small buildings, like Brooklyn locations, like low tax bills, free market, not regulated.
I honestly don't understand how people can hold them, because
The big ones?
I mean, obviously if it's fully rent regulated, like your taxes and your expenses are going to go up each year, but it's like nominal and you can kind of calculate that. But all the investors that are buying these class 2 buildings, right, 1630 unit buildings, and they're renovating apartments, I mean, your expenses are obviously going up, but every year there's a number of examples the taxes just increase, and you just watch 2, 3, 4, 500 grand just come off the value. So like, literally, if you're holding a class 2 building,
In terms of a cap rate on the tax increase.
if you're holding a class 2 building, especially in like a good location, and you're renovating units and you're filing your income, which you have to do, right? Mm-hmm. You're literally losing money every year. Your taxes can go up 20, 30, 40 grand, and obviously if you put a cap rate on that, you're talking about there's numerous examples that I saw just this year where the taxes went up, people losing $600,000-$700,000. So how can you
At a cap rate.
at the cap
terms
rate
of value,
if you put the loss,
Understood.
it's but how do you operate that way? How can you just lose that much money? The only way to do it is you buy them, you renovate them, and you sell them quick before you realize that increase in expense.
Mm-hmm.
I don't get it.
Well, I was going to say earlier, I think, to Donald's point, I think the fully regulated stuff, there is demand. I think the buyer pool's changing a little bit for that. It's more family offices and these large operators that are just kind of looking at it as a coupon. I think the 50-50 deals, which are like 50% free market, 50% rent stabilized, like those are really hard to move. But things that are like 70-80% free market,
They're hard to move if they're
I think
not
the prices
clean.
changed a lot too, obviously. On those.
Yeah, but I think as long as there's a high enough percentage of free market, I think all the syndication groups are still really looking at it because of the promotion structures within their equity holdings in terms of like how they operate, and they can go in and still get their management fees and their renovation budgets, and they can go and actually spend money. But I think the 50-50 half stabilized, half free market buildings, those are the hardest ones to sell right now.
Do you think there's a difference in value for properties that are like statutorily deregulated? Like there's a letter, an order and determination saying it's a free market, or it's under 6 units, so like it's statutorily a deregulated free market building, versus a building where someone says it's free market, but it's based on individual apartment improvements that have been done over, say, the past 15 years. And let's just say the paperwork is great. They have all the paperwork and
Great,
the rents.
meaning that like an attorney gave you the check mark that it's free market.
Maybe, or the owner says it's great. The owner says they have the paperwork. They can show proof of payment. They have the quote unquote paperwork.
But no one's going to buy it until they actually see that paperwork and have an attorney look at it.
For sure.
I mean,
do you think there's a
obviously,
difference in value for one versus the other? Or it's the same.
I mean, it depends. It depends how good. If the paperwork is very good and clean and it checks out and no one denies that, I mean, that's very good. Obviously, like, I would prefer for someone to tell me it's free market, right? I mean, DHR's not going to do that unless you go and show them all the IAIs. I'm sure they'll do that, right? If you took an apartment, if you took an apartment, went to DHR, right, similar to like Jersey City, and you said
And filed for determination.
yeah, like Jersey City, for example,
I don't know
right?
if DHR's doing that.
They do it in Jersey City. I mean, why wouldn't they? It's all. There's a rule for that now.
They
Look at
should
that.
do it. I don't know that. I haven't seen people file for
what you said.
determinations on apartments where they did individual apartment improvements. I think it's more a function of like if there's an overcharge complaint and it goes to court, then you kind of have to demonstrate your paperwork, and then I think
Yeah, that's what
Would
I
it
was
be
going to
ruled
say.
on?
Like, so I think inherently, if you have under 6 apartments, it's a better thing to have because all it takes is one, viral Instagram video about some tenant in a free market unit that claims an overcharge case, and obviously, then as an owner, you have to spend money to fight that.
Yeah.
And there's
The
no
issue is
repercussions.
deal with it.
There's no money
Yeah.
in that, though. That's the issue. The syndicators, all these guys are raising money. They can't make the money they want to make on these small deals. So they can't go and buy 3 units, 5 units, 4 units, like 4/2s. They can't do that. So the IIs are very, like their deal, like the top syndicators that we all have in our mind right now, like their ideal building, like their listing that they can get is something in a good location that's 10, 15, 20, $30 million, where it's 80 to 75% free market with great paperwork, where the renovations are like 10 years old. Like that is, everyone has money for that, and that's where they want to spend their money.
And big units.
Yeah.
Where they can go in and convert and really add value and add a bathroom.
But those are rare, right? Like
Yeah.
how many times
rare.
it's rare to have someone that has a big building that's 80% free market, and then the paperwork. It's hard to have those. I mean, I just can't believe people have them for that long. They do. Some people do.
Yeah,
a
some
lot of
do.
people don't, and it has to be organized for that long too. Yeah, they don't. They didn't have that technology back then, like with computers, where everything was saved and scanned in. Like you had to
Well,
have
it
the hard
depends how far
copies.
back you go.
Yeah, some of them were going back really far.
Yeah, for sure. All right, what opportunities are being overlooked in the market right now? Like, where do you guys see opportunity that people kind of aren't focused on? Maybe there's like where are people making bets in different ways? Do you see that at all?
I think, if my personal opinion, I think rent stabilized.
You think rent stabilized is being overlooked?
I do think so. I think people just write it off really, really quickly, and there is no raised capital for it. Maybe obviously there is, but in a rare instance, right? Maybe on a large scale, there's equity for it. But yeah, I think there's opportunities to buy clean, rent stabilized product in really good locations at prices that are very, very low. And obviously, you're relying on the laws changing, but it's a bet, and it's a bet that I would make in a very good location. And it depends on the deal, but I think that's being overlooked.
Okay.
And I like.
And what's the play on that?
What's the play?
Yeah.
The play is by clean buildings, right? Like clean meaning like no little violations, if any. You walk into the building, there's not a ton of deferred maintenance, it's clean, and most importantly, price point for me is price per foot and what feels right. If you can buy this stuff in prime Greenpoint, prime Williamsburg, downtown Brooklyn, like the brownstone neighborhoods, if you can get something where it's in the mid 200s a foot, low 200s a foot, obviously if you can do better but good. I mean, you can't. Sometimes the dirt is worth more. If you just get it vacant, it's worth triple. Like, literally, there's situations that I've seen where someone buys a building, if they got it vacant, they're tripling their purchase price, and the dirt itself that the building is sitting on is worth double what they're paying for it, and they're just making a bet in a core location where the laws have to change. They're really gonna. I think that is being overlooked, and there's an opportunity there.
And what kind of cap rates would you anticipate on those kinds of properties if they're available?
So people will say, okay, where interest rates are, I need 8 caps to rent stabilized. And like there's locations where you need 8 caps for sure. 7.5 caps, 8 caps, because where interest rates are. But honestly, I'm not so concerned. If it's a prime location, like obviously you don't want to, like in a market like right now, you probably don't want to buy under a 6 cap. And a lot of people say 6 caps way too low for rent stabilized. And it is. But if the price per foot and the amount that you're paying, if that's really attractive, I'm not so concerned about the cap rate, because what's the difference? It's rent stabilized. You're buying a 6 cap, a 6.5, a 7. Like you're screwed either way. It doesn't matter. But if you're buying at the right basis and it's cheap and it's prime, that's more important than a few extra points on a cap rate.
And the hope there is
the laws change.
Is the laws could loosen
They
up.
loosen up, right?
Yeah.
They loosen up. And
Do you think that's like in the cards at this point?
yeah, I do. I think.
Why?
I just do. I think you can feel it. I think things are changing. I think these laws that were made in 19 are not working. I think people are not paying attention to these buildings. They're losing the buildings to the banks. The banks are tanking these buildings. People are losing a ton of net worth, ton of equity, and it's just not. And people aren't keeping up these buildings. So if you can buy in, let's say, prime Greenpoint, a building that's in good shape, let everyone else do the work for you, right? That area is gentrifying like crazy. The retail guys, the developers, they're making these areas amazing. You're just sitting there on those blocks in this undervalued real estate and letting everyone else just boo you. And then the laws change a little bit. You sink right up to the surface with them for cheap.
Yeah.
And let them spend all the money to do
Your
it.
expenses are
Yeah.
controlled. They're not going to skyrocket on
So that's
you.
a bet, yeah. And I like sub-rehab.
Okay. Cool. Anything else? Any other kind of
Sub-rehab.
property? Oh, sub-rehab. Oh,
Yeah, I like
so
sub-rehab.
explain.
Yeah.
Explain.
I like sub-rehab. I think another thing everyone's afraid of because they don't have clarification, and the laws just changed. No one really knows, and there's no raised capital for it. When I say no raised capital, there obviously is some, but very, very little. So no one's chasing it. No one really wants to deal with it. They think it's really, really impossible and hard, and it is. And you have to buy the right product to do it. Especially today, it needs to be the right building. But if it's the right building and you can buy it right, I think there's a really good opportunity there.
Yeah, there's a couple of investors still chasing it.
Yeah,
for sure. There's a
they should
small
be.
amount, but yeah, a lot of people are scared of it for sure. I mean,
Yeah,
they just don't
it's
want to
very
deal with
nuanced.
the headache. Yeah, for sure. And I just don't think a lot of these syndicators really have the time or they want to even put the effort behind it. I mean, like just seeing people go through this paperwork, it's extensive, and so the next syndicator has to move on to his next deal, and he has to keep on pushing the next deal forward. So
Well, it's
I
like
just don't think they really want to
I mean,
spend
there's been
time.
some bad cases that have come out
sure.
from the
For
courts
sure.
on sub
And
rehab
word
where
gets-
owners and
word gets
investors.
around.
Yeah, I mean, it's like there hasn't been clarity. No one understood
Yeah.
what the 80% presumption really meant in some ways because the court has kind of backpedaled on that in some ways. They haven't defined substandard condition or seriously deteriorated condition.
It's
So
the
like,
biggest one, yeah.
So like you kind of go into a multi-million-dollar development without clarity, but
That's how you make money.
it's like the counter.
The more clarity you get in anything investment-wise,
Yep.
the cheaper it gets. Or, I'm sorry, the more expensive it gets. Once you get more clarity, more people will buy it. But when there's the least amount of clarity, that's when you can make the most amount of money. And right now, there's not great clarity on the new laws, and you do see people getting bad results, which obviously is scary. But listen, I don't blame anyone for being scared of doing some rehabs or not wanting to deal with it because that's all very true. But if you can do it and you're knowledgeable on the right attorneys and it's the right product, you can make a big spread on that.
I like it.
Yeah.
I have
Sounds
one
good.
more. I have one more.
Oh, another.
This is obvious, though.
Man,
It's
let's
obvious.
go.
This is a little more obvious. The fully occupied, free market buildings that are low rents because of the good cause eviction, which I can't believe that's even. People are taking it very seriously, but it's like not a real law to me because it's hard. Good luck proving that you don't own more than 10 units or whatever. Like there's just all these like little things and whatever. People are taking it very seriously. I think you can buy good located free market buildings with low rents. I think you can buy that well, and I think obviously getting people out is hard, but it's very doable, and you can make a lot of money.
I mean, I live in Flatiron. The building was, I think, built in the 80s.
Yeah.
I just got a lease renewal, and there was a whole write-up on good cause eviction, how the building...
There you go. It's the law.
It's a law.
Here's
It's a
my
law.
set increase. As a tenant, I loved it. As a real estate broker, it makes things obviously more challenging. So, the sub-rehab, it's a big bet. And if you're on the wrong side of that, you can lose as well.
scariest
It
one I know
sounds
the
like
biggest conversation.
it sounds to me like of the three you described that the occupied free market buildings are probably the best place to be.
That's the
Probably
safest. That's the safest one.
Yeah, I mean, hopefully you get a discount on the price based on the in-place rents.
Yeah, how many
and
times do you come
it's like
across
the
that,
least.
though?
It's like the least risky, and in terms of like the fully rent stabilized buildings, like those, that's just like kind of a prayer in a way.
It's a
like,
prayer.
It might be a good prayer. I hope it turns out to be true.
I have to
It's
also,
100%
I also
fair,
for
but-
the rent stabilized play that I talked about, I'd like to also understand the investor's age too. Obviously, you need a little time on your side if you are much older.
How much time?
I mean, I recommend that for someone in like a younger investor. You have to.
What does that mean? Like 15?
You need,
Not
you need
15,
to see, you
but
need to
like,
see the next
if you're
20
young,
to 25
yeah,
years.
you need to be in the seat for another 20, 25 years. But that being said, I don't think someone would be I wouldn't be pushing that on someone. Like, I think this could happen, right? Like, pretty soon, the next 5 years.
I also think one of the things people are sleeping on are like kind of Class B office right now. Like, obviously, the big
office.
trend is office conversions, and office is taking a bloodbath over the last, especially in Manhattan. I mean, you're seeing buildings traded $200-$300.
This has been well documented.
I know, but as someone that owns a business and our renewal's coming up and we're starting to basically seek out where office rents are today versus a few years ago when we signed our lease. I mean, office rents across the city are going up and the vacancies are going up. So I'm not convinced.
Vacancies are going up?
No, sorry. The occupancy rates in office buildings are going up. So there's less office space
Occupancy.
available.
But why are people are still
More-
selling them for cheap, though? Why would they do that?
So hear me out. So there's less office product in the city inherently because of all these office conversions as well. So I do think that if you have an office building in a Class B in a good core Manhattan location, I think it's something that the demand for it is increasing significantly.
To use it as office.
To use it as office, yeah.
Let's keep
No,
moving
really.
since we're not
I thought it'd be the
necessarily
redeveloped.
so big on the office sales front. I
Sure.
mean, this is in the news a decent amount. I'm kind of trying to figure out a little bit more of like where the nuances are in the investment sales market that we kind of play around
Everybody and their
in.
mother is trying to renovate office buildings to convert them.
Everyone is.
Everyone.
They all want it.
Yeah.
What's,
But, like,
what's,
two-
interesting,
two-
what's,
two-
what's
200
interesting though is the you know what's kind of crazy though that I don't think we've really talked about. I mean, we talked about it in this office a little bit, but you have these guys that we were selling buildings to back like 10 years ago. They were buying like the small renovation deals or like small ground up deals. And now these guys, these Brooklyn guys that were so active in Brooklyn are coming in very strong into the Manhattan markets. Like you see them in the transfers for big deals over and over. And I'm hearing it with my clients where they're saying, I'm looking at, you know, properties in Manhattan. I'm looking at sites in Manhattan. So I think it's really interesting that this crop of guys that we've done business with for so long are stepping into like these larger premier type of redevelopment deals.
Yeah, I mean, Luke was talking about it earlier. I mean, you're seeing 500 plus per foot per buildable in Greenpoint, Williamsburg. Like, you're not seeing that in Manhattan and in even good areas. I think Manhattan, the ground up construction sites oftentimes have all these like amenities, and it's sort of like a requirement. Obviously some of the Brooklyn ones don't because they're smaller on like 25 or 30 foot lots, and they're usually 5-story, walk up condo deals. But yeah, I think the ground up luxury development in Manhattan, I think is going to be a very big trend this year. So,
All right, cool. Next on my sheet here is, and I don't know if we kind of went over this at all, but where are the market pressures? Like, where are the stress points in the market? Obviously I'll just throw out a couple broad topics that we could maybe get into, like obviously with the fires out in California recently, and the hurricanes and all that stuff, there's been a lot of talk about insurance costs, and Adam mentioned before, obviously this is a big part of the market at this point, but is interest rates, and we touched on taxes and rent regulation, but like what are the stress points in the market at this point?
So you talked about insurance. So
Do you think that's a stress point?
100%. I mean, obviously countrywide, what's going on, that's going to affect everyone. But like immediate, like for us, there's a lot of frame buildings in Greenpoint, Williamsburg, and Bushwick. So obviously this is like a smaller investor issue, right? 6 families, 8 families, small mixed use, but you can't ignore it. There's a ton of it in Williamsburg, Greenpoint, and Bushwick. And the tax bills, we used to underwrite and be very safe. Like this was like a real number, $1,000 a unit. I think you're at $2,000 a unit right now in frame buildings. You are, right?
For insurance.
I know you are, yeah. 6 families, you used to get insurance for like $6K, using a 6 family as an example. They are $12,000, $13,000, $14,000 for a
And
clean building.
What about if it's brick?
Brick? It's way better. It's way better. Way better. It's half the price.
Is it?
Yes, you could still. If you had a 6 family
What's
brick,
the
6 family frame building,
what's the
Makes
difference?
sense.
It's a fire risk.
it's a fire risk. So the issue is this: all the frame housing is connected, obviously. Some are not, but mostly you see rows
Yeah.
of 6 families or 8 families that are framed. One lights up, the neighbors are all going up.
Wow.
Obviously, they're wood frame, wood burns, right? Plastic burns.
Some
and they all go up. They all go up.
Yeah.
And the brick, obviously, it's a more contained fire. So it stays in that unit, stays in that building, gets put out. You can take out a block.
Some of these frame buildings have brick inlaid in them.
Yeah, but it's still.
So
I know, it's still good, for sure.
Is insurance a point of stress for the brick properties?
No,
Like
I don't
what's
think
going
so.
on across the country and just the cost of insurance in general?
I'm not so in New York.
Yeah.
I'm not. I have seen brick be completely fine. Like, depending on what it is, I haven't seen it's that big. It's what everyone's underwriting to. It's the frame stuff that as a broker,
All right.
I've
Interesting.
seen someone. It just and then if you get into like violations and the insurance company looks into that,
Let's talk about it.
I mean, I've heard of people where they had insurance for 10 grand, then they get some tenants call 311, they get some violations, and they get a call that their insurance is going up by 5 grand.
What kind of violations?
Just like any kind of violations.
Anything?
Yeah, like a tenant's calling saying that there's a crack here and there's leaks here and mold here. Like,
Why do you
if
think the
it's-
insurance company's doing that?
I don't know. They're
Raising
I mean,
the rate?
obviously, I mean, it's not the product is deteriorating, so they're probably like, oh, the frame is the worst that I've seen. Okay,
Okay.
throughout the country, obviously we're not brokers throughout the country, but that's got to be huge because New York's the only place that people are like banking on appreciation. Like they'll buy it, they'll own it, and they'll like the cap rates will go down, the rents will double. Like other places in the country, this is pure yield. So you're looking at cap rates. You don't see like the frothy rents. You don't see this stuff go crazy. And insurance is a big line item. So if it goes up, your cap rate gets immediately hit.
Well, your value gets hit as a function of the cap rate.
For sure.
Yeah.
That's what I meant. But you can't like in New York, okay, my insurance went up, but my rents went up, right? You can kind of like combat. Other states, there's no combating. You're done. Your rents aren't in Georgia. You're not going to get a 1-bedroom in Georgia and like double the rent because you gutted it. Like you're just not doing it. That's not the plan. So anything that really hurts your NOI, which insurance does, that's obviously a line item on expenses. You're done. I mean, you lose money. A lot of money.
Just like what you described earlier with the tax increases.
Yeah,
Same thing.
Yeah. So if my
It's
insurance
the-
goes up $5 grand a year, that's $5 grand off my NOI.
Mm-hmm.
Okay, that's a small amount.
At a
but
5 cap.
Yeah.
Yeah.
Then $5 grand's a low amount of money, but like you get what I'm saying.
For sure.
So I think that's a headwind, and just financing in general, monster headwind. It's the hardest thing.
So let's talk about
in
that.
our
Let's
business
talk
right now is
about let's talk
financing.
about financing. Let's talk about interest rates. Let's talk about just what's going on in the debt markets.
Yeah, I mean, someone else take this, but like that's the hardest thing in buying real estate right now or owning real estate is financing. I think.
Well, let's just keep going on it. Like,
Yeah.
is it a function of it's a function of interest rates impacting debt coverage ratios, which impacts LTVs, and therefore LTVs are coming back low.
Yeah, obviously.
Like that's kind of the issue, right?
Yeah, it's obviously like the issue, but like it's also like timing and banks not wanting to do business, and everything takes forever, right? Like to get the appraisal in, and for someone to go and underwrite and then commit. Like it's just there's a huge song and dance, and then obviously it all comes. Banks don't really want to do business right now, is what it feels like. Maybe they do, but it depends on who the client is. But obviously interest rates are very, very high. So like it's just very hard to get acquisition financing on a deal at the right LTV. It's very hard to refinance a deal and get like what you want out. That's why we're selling so much new construction building, right?
Yeah.
It's just very hard to deal with banks. I'm envious of people that have like the family funds that could just buy the stuff in cash because they have such an advantage over someone else right now.
Absolutely.
It's amazing. It must feel so good
Yeah.
to not have to worry about getting financing.
If you can offer a seller
Yeah.
a real like close in 2 weeks or close in 30 days, and it's real, man, you could probably get some really good deals.
Yep.
You have to be putting it out there.
It's amazing. That would be.
And
that'd
people
be
are.
great.
People
Yeah.
are. People are getting really good deals for being able to close quick and certainty of execution.
For sure.
All right, good. So, I think that kind of wraps up what I had here on the agenda.
Does anyone have anything else on financing? I mean,
No, I mean, other than like from what I hear from mortgage brokers saying, it's like just a pain and it's just like extremely time consuming and very long.
Yeah, like
for people to get financing.
Our mortgage broker that we talked to, he said that every deal he's happening right now, he's the stress
it's
has
had a
ever
spin.
been.
Yeah.
Every deal, no matter if it's cookie cutter or not, there's issues with it.
Yes.
That goes back to what I'm
Yep.
saying. The bank, everything is so hard.
Well, is
not
it?
not only issues, but it's like if you have no relationship whatsoever, it's not good. It's not happening.
No.
That's what I've been told at least. Like
I'm
there
also
has to
hearing
be
just
some
like the amount
relationship.
of banks that are actually out on the street, like lending is decreasing, right? Like so, there's only a handful of them that are actually out there trying to make deals right now. So
Yeah, and they'll say they're trying to make deals, but they're not.
right.
They will at like
Yeah.
some stupid cap rate
mean,
or some
yeah.
stupid interest rate,
Yeah.
and like if you give me like $700K and I hold it forever, like there's that.
Right.
Yeah, for sure. The whole relationship thing,
No.
which is really just
Yeah.
a discount on the loan proceeds
Yeah.
by like 10%.
Yeah, and then they don't really actually give you a return on all that money. They make a return. And then,
Yeah, they make
And
a
you get-
return, and you
yeah.
sit there and make zero interest
yeah,
rate,
and then they lock up all your money.
and they want 10% of the
Yeah,
loan. Yeah,
yeah.
that's cool.
But they're lending, quote unquote.
Yeah, I hear you.
All right, so any takeaways from the discussion? Anything else that you think is worth hitting on? Adam, it looks like the wheels are turning.
No, I'm just really optimistic on the year. I think like coming into January, I think all of a sudden like there's just been a lot of contracts getting signed. Yeah, I think in terms of like stuff that I'm working on, like we're bringing out a lot of product in Manhattan, fully stabilized, some really nice building in the Upper West Side, a nice free market building in Tribeca. We just put a nice corner property, condo redevelopment and Park Slope in contract for a nice number. I think things are moving right now, and I think this is going to be a great year, for especially for sellers and for buyers, because I think we're in a rising market, and I think things are doing really well.
That's what that market seems to be humming pretty well, like the Park Slope, Cobble Hill area. Like, I mean, with what you guys are selling and
The brand,
what's going, with some of the prices that I see there. I mean, we were just talking about it earlier. JJ Redick selling his townhouse for $2,500 a foot is
Yeah, 2,500 a foot.
It's
13 million. Looks like
nice house,
it looks
though.
like it's sold all
nice
cash.
house.
Yeah,
Yeah, but it's just like it's a lot of money being spent.
he just got renovated it. It was a full gut, and it was.
But it's like
looked
not only
beautiful.
that, it's like other people coming
But
into
for-
Brooklyn
it was
Heights and
only-
buying
it was a
those
21 footer.
buildings.
For our business though, like macro, if you can show like these people that have raised capital or have money to spend, if you can show them like a path to do it, like where they're gonna buy something and gut renovate and get some huge rent or sell it to condos, they are pushing the envelope so much to be able to try to make a transaction. If there is a path for them to do whatever they need to do,
Yeah.
like I've heard the most lofty rent projections like ever. Like, I'm gonna get $30,000 a month for this 3-bed, 3-bath in Tribeca, right? Like I've heard these numbers.
Yeah, well,
Like, and those could happen, but like if they can make that argument and get investors to do it, they are pushing pricing as much as they can.
Yeah.
Because they need to buy. Everyone needs to buy deals too.
Yeah.
They need to buy deals. And
so people are very optimistic in terms of where
It needs to be the right
in
product.
terms of where costs of housing or values of housing is going and values of rent. Is that right?
Correct,
I
100%.
think so.
Well, that-
and then also they're projecting when they finish these buildings, how long does it take to finish? Like 2 years?
Yeah.
Or maybe
Condos,
over 2
yeah.
years. I mean, best case scenario for some of these projects, it's 2 years. And it's like, where's the market going to be in 2 years?
And where interest rates going to be?
I mean, a lot of people are making that bet that probably interest rates hopefully are going to go
And
down.
with the new administration, especially things that
less
they're seeing.
regulation,
Yeah.
like that's also why I think they're being so aggressive.
But maybe I don't know if interest rate's going to come down
I mean, maybe
Unless-
they come down a little bit. I mean,
unless Trump can it puts Jerome Powell in a headlock and makes him do it.
I mean,
which he
look,
might
Trump's
do.
been in office for 4 weeks.
Dude,
It seems like it's been there for like
it's
four
not the Fed.
4
I mean,
months.
in terms of us, it's the Treasury. But
Yeah.
It's not the Fed. It's the
No,
Treasury.
yeah.
It's all the 10-year Treasury. It's all
I
it is.
saw a post
Yeah.
on X that Elon Musk made where he said if we can get government spending under control, like get like what's going on, he said the 10-year Treasury will drop,
Yep.
which will obviously be very good for the economy and the market as a whole. I have no clue what kind of truth there is to that, but
If he says it, it's probably right.
Yeah,
it sounded good.
Yeah.
It sounded good.
yeah, and they're doing some cutting.
Yeah. It needs to be cutting.
Yeah,
But I guess that also leads to inflation, at least in terms of rent growth and property values going up in value. So, yeah, who knows? Hopefully interest rates go down and we get some relief. I think as long as the stock market stays high and stays humming, I think once we get some relief on the rates, you're going to see the market just explode in terms of activity. It's not like we haven't already. We're already experiencing it, like just a huge amount of transaction activity. But we're still at like a sticky point with where interest rates are and
But you're
people's
still
ability
seeing
to
things
get financing.
move. You're still
I know.
seeing things
The right
move
product
forward.
moves.
The right
I know.
product is moving.
So I agree with Adam's
Yeah.
optimism. I think there's a lot to be optimistic about
Yeah,
because
for sure.
2024 was, in a way, I mean, with where the interest rates were, it was kind of a tricky market. It was a little bit tough. Things got slow at points in the year, and now things feel like there's a lot of
Not
activity.
as tricky as 23. 23 was the trickiest.
Well, there's
I
just
think.
well now you have certainty. We know where rates are at. You know where the rental market's at. All these obviously new regulations with development
and the
all-
election's behind us.
The election's
Thank
behind
God.
us.
Yeah, it's behind.
Like we know where we're at, and sellers like we can underwrite deals now. Like in 2023 and 22, 24, like when things were changing so rapidly, like it was really hard to price stuff out because by the time it went to market, like rates were changed drastically and values were changing so much. But I think the market stabilized, and
All right.
I think it's gonna be a great year especially for our company and especially for the broader market in New York. So
Yeah, good stuff. This was fun. It's been a while since we did this, so good to get the guys talking about real estate again.
Yep.
You guys,
Yeah.
you